Good weekend. Ira Epstein of Linn & Associates with your weekend edition of your SPDR ETF wrap-up for this Friday, and this is the 8th of May, 2020. So on the weekend, what we do is we look at the charts in a weekly basis, not the daily. And the reason is we're trying to get a bigger, broader picture of what those look like. I was watching today as a number of the analysts on the different shows. I watch between Bloomberg, I watch between Fox and CNBC, obviously. So between the three of them, I watch how the analysts do their reviews of the charts, and it is dailies, weeklies, they're trying to make their stories as to which way the markets may go. Of course, the week showed that unemployment came out with a disastrous number. In fact, the interesting part is none of the fundamentals are good. None. The only good thing is that what's going on is we're hoping to get maybe a treatment for COVID-19. Maybe there'll be a miracle vaccine that can be found. I don't know. It's like the Manhattan Project. There's countries everywhere working on it. Maybe the shut-ins will help the disease slow down. I don't like that we're seeing young children suddenly showing up in the Illinois area now, New York, other areas. All of a sudden, they're getting ill, and that is not a good thing. What is going on there? What does that mean for the school system and like? I don't like that many of the areas that are open may have done it too soon. I don't know. Time will tell. The COVID case will say they're either right or they're wrong with what they did. I live in Illinois, and there's an uproar because the restaurants, the bars, the social venues can't do this. They don't have the funds to keep doing this. And the landlords, it's a domino. You don't pay me, I can't pay the mortgage, I can't pay the mortgage, the bank wants to take it back, they don't want it back. It's a nightmare that is going on. And the unemployment number, it was tragic at 14.7, but not as tragic as it could have been. So the markets went up today. They looked at it that, hey, it's not as bad as it could have been. A 20% number would have scared the market, but it might have been 20 if you count the furloughed people. But that's not how the government is doing it, because they're right. They don't know out of the furloughed people, are they really unemployed? Are they going to have to go work? Are they going to decide they don't want to stay in the workforce? We don't know. This is a lot of don't knows. Okay. The corporate debt, that's going to be bought now by the Fed. So we're going to see them launch into this very possibly this week. And one other thing. I am going to have, I think, some eye surgery on Monday. I had one eye done. Now it's going to be the other eye. They've waited 3 months because of the COVID, so I may not be here Monday afternoon. I just don't know. If they can't do the surgery, I'll be here. It's that simple. Otherwise, it's one day, and I'm back on Tuesday. It's not a big deal. Okay, so let's go to the charts and let the charts do the talking. I'm impressed with this rally. Now, I can tell you as a technician what technicians look for. Gaps in charts. If there's a gap in the chart, a technician will tell you gaps get filled. And that's generally what happens. So if this market's going to move, I immediately look at that and go, okay, if it's going to keep coming up, I look at that as an area that I think it's going to be like a balloon. I pop the balloon. We'll see if I'm right or wrong. That'll be the interesting thing there. What's the trend? It is certainly to the upside. This market's got higher lows, higher highs. And let's understand, the tech sector won. Big time win with COVID-19. Be it the workouts at home, be everybody's on their modem, their whatever they have in their house for their internet, their new modems are being bought, you're changing services, you're buying more services, the Netflixes of the world love it. I don't know how long that will all stay, but it's changed. And it's from Zoom on. These products are just taking off, and people are learning how to do this. When we look at where the market ended up for the week, it's the first week we're over the 18-week average. So we have not only the trend up, but we have the bias up. It has joined in the parade. It's a little late, but it joined in the parade. When we look at where the upside target is, well, I have two of them. I have the gap, and then you have the upper Bollinger Band. And this has been quite a ride to the upside. When we come over and we look at the momentum with it, still pointing up. Nothing excessive here. So everything's bullish. Support on pullbacks, 90. If you broke 83.64, people would come out and say, aha, the market ran out of its momentum. It was a heck of a bounce, whatever. When I come to XLI, I'm going to put on this one the Fibonacci counts just because I want to. You can see that you got to a 50% retracement. You pulled back a little from that. The market looks different than the XLK. You've got higher lows, higher highs, but you're under the 18-week average, so the bias is down. This is still going to be considered by analysts a bear market bounce. That's the point I'm trying to make. XLE, the energy sector, a bear market bounce. Why? Because you weren't and didn't even get up to that 18-week average of closes. So after a big break, a bounce, trying to catch the top of that bounce. Why? Let the market tell you where it comes in. But because you've got the swing line up and the bias down, I don't see anything to do in that from the bigger picture. The XLE, let's take this week off. You've been fighting right here for 3 weeks. And against that 18-week average, back and forth. Now we know that we had a pattern of higher lows and higher highs. So the support's 210. The market broke out of it today. So back here, there's another gap in the chart. That could be where this market is headed. Let's call it the 230 level. So I'd be looking and see what the market does, if it can get up that high. What I don't want to see taken out, you have an outside week up. I don't want to see this low taken out. If it is, I think it's a bull trap. But because it's literally right on the 18-week average, it's not the same had happened when the market was at this number. It would be a warning sign, though, that the market's running out of steam. When I look at the EFA, okay, another one of these markets that collapsed, getting a bounce. It made it a third of the way, roughly, 38%, then 50, backed off. But you still have resistance over it, and you haven't gotten up to that 18-week average. It's XLK. It's QQQ. Those are the powers of this market. Tech, one word. GLD. Well, in time, what do you do with all this debt? Now, the president this week said, at least through Larry Kudlow, that they are going to wait until the end of May, beginning of June, to see if another tranche of these assistance funds are needed. Okay, I get it, and you might as well wait and see how it is and see how the COVID is going. More states will be along. They're discussing it. But you have higher highs, higher lows. You've gone into a stall right here. If you take out 157.04, you could fall back to the 152 level. It would still be the bias up, but that would break the trend. If you take a look and can clear here, the 162 level, no reason not to go back to the upper Bollinger Band at that point. The bulls have control of the market. Gold miners, the bulls have control of the market. You've got higher lows, higher highs. The bias is up, momentum is up. The market hit the upper Bollinger Band, backed off as bull markets often do, and I wouldn't be surprised if it makes a run for it again. TLT. The break this week was to 162.05. So the market's put in a trade top. Suddenly you broke the pattern of higher highs, higher lows. You have a higher high now and a lower low, and momentum rolling. So on the roll, can the market get back to the 18-week average? Even if this market got over 172.15 on the current pattern, you'd have a lower low, higher high. So this whole move has just now gone into another stall. It did one of them here, and then it came back, rescued itself, and seems to have petered out again. And notice, by the way, you're unable to take out that spike high when all the panic was hitting in the market. In FXE, no trend. You're staying under the 18-week average with bias, and you've been doing that since literally the beginning of March. But you can't seem to put together a down move that can get to the lower band, and every time you think you're getting one, the market snaps back and makes a higher high. A difficult market, and generally speaking, a lot of these currencies are the easier things to trade. You're just not getting it. I want to remind you of what I do. In the afternoons, I come in and I start at about 3 in the afternoon. Let's call it 4, somewhere in there. And I start reviewing. I create another video, if you will, but I'm not in it. I sit in my desk and I review all these markets. Now I've added more. I've added to the interest rates now, the corporate debt, popular one. I've added more into the energy markets, UNG. So we'll change the ad, but I keep adding. And the reason is because these are my subscribers that want to hear what I think's going on, where to buy, where to sell. This is general, the one you see me do here. This isn't the meat and potato. This is the leader to get you to try the other and see if you like it. I'm certainly not shutting these off on the YouTube, but you're not getting the meat. I've taken you to the table for the appetizer. If you'd like to see the meat, it's not expensive, and it doesn't ever get expensive. It's $8.95 for 30 days. If you like it, great. If you don't, you're not under a contract. It's $16 a time after that. And I'm even thinking of bundling this into my futures program so you'd have this in the afternoon, and then because all of these markets, other than the individual sectors, they're looking at what the futures are. So if you get that one in the morning, you have an idea even before this market opens as to what to expect in those. That's the idea, putting these two back to back in that way. That's why at first I had asked my subscribers, do they want me to stay with the morning or afternoon? It was pretty overwhelming because a lot of them take the morning futures one. They brought it in my attention. I didn't realize it because I was going to do them back to back. And they said, nah, keep it this way. Hope you give it a try. I'm Ira Epstein. Remember, I may not be here Monday, but I'll be back on Tuesday, God willing. You have a good one.